Hello everyone and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Press disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at elite wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. Let's dive into today's session. So these are the main session goals. We're going to analyze the market movement, identify profitable trade setups and enhance trading strategies, spot potential trade setups, and actionable trading ideas to boost profitability while managing risk efficiently. Let's start with the previous week global market trends. I am going to talk about previous week fundamental analysis. The first one is the gross domestic product Q over Q related to Australia. The next one is the unemployment rate related to Canada. Okay, the first one is the gross domestic product, also known as GDP. GDP is the short name of gross domestic product. Q over Q means quarter over quarter. So, what is gross domestic product? The gross domestic product quarter over quarter measures the change in the total value of all goods and services produced in Australia compared to the previous quarter. As one of the broadest measures of economic health, quarterly GDP reflects the strength and stability of the Australian economy. A stronger than expected GDP reading typically supports the Australian dollar. A weaker reading usually pressures AUD USD currency pair to the downside because it provides a comprehensive picture of economic performance. GDP closely monitored for its impact on market volatility and interest rate expectations. Now, the previous number was 0.7, forecast is 0.7% as well, and the actual number we got is 0.4%. Now, the currency pair I'm going to focus is the AUD USD currency pair. The Australian dollar GDP release is a major event for AUD USD currency pair traders, and forex markets were expecting a steady 0.7%, but the actual figure came in lower at 0.4%, signaling that economic momentum has slowed. Despite this weaker number, AUD USD moved higher immediately. Let me show you the chart of AUD USD currency pair. So here is the daily time frame of AUD USD currency pair. So price action is going up. This means I would say United States dollar or the DX is becoming weak and the Australian dollar is becoming strong. The recent Australian data has shown mixed conditions. Consumer spending remains soft, business investment is uneven, housing and construction are slowing. Exports remain supported by commodity demand. The 0.4% GDP result confirms that growth is cooling more than projected. Normally, weak GDP means bearish Australian dollar, but AUD USD currency pair rose up due to short positions being closed, broader US dollar softness, and market relief that GDP did not fall further. So, Forex traders shifting focus to Reserve Bank of Australia's next guidance. This shows how fundamental plus market sentiment combine to shape real world price action. Now, the scenario that we got is the forecast was 0.7%, but the actual number we got is 0.4%. Usually, if you get a 0.4%, then AUD/USD usually drops. But price action actually showed us a bullish breakout over here. If you take a look at a weekly time frame, this is where you need to combine fundamental analysis along with technical analysis to make a good market analysis. Also, if we draw a simple trend line over here, this is where we got the breakout and the news came in right over here, and after that market rallied up. Okay, so this bullish breakout tells us that AUD/USD wants to go up instead of going down. So the Australia's weaker 0.4% GDP reading shows slowing momentum, but not a dramatic downturn. The AUD/USD currency pair upward move highlights the importance of both economic fundamental analysis and the market positioning. The key components to monitor this month is the household consumption, business and mining investment, construction data, exports performance in Australia, and the Reserve Bank of Australia's upcoming policy tone. These will guide AUD/USD next major move. So the Australian GDP quarterly report we got is 0.4%, which was weaker than the expected 0.7%. Uh, but yet the AUD/USD moved upward, a reminder that market behavior often diverges from pure economic logic. And successful forex traders combine data, sentiment, and price structure to interpret opportunities effectively. The next one is the unemployment rate related to Canada, and I'm going to discuss the US dollar versus Canadian dollar currency pair. So, what is the unemployment rate in Canada? The unemployment rate measures the percentage of Canada's labor force that is unemployed and actively seeking work. It is a key indicator of labor market health and reflects broader economic momentum. A lower than expected unemployment rate is typically bullish for CAD, signaling stronger hiring conditions, healthier spending potential, and reduced pressure on the Bank of Canada's to cut rates, interest rates, I mean. A higher than expected jobless rate indicates economic weakness and is usually bearish for Canadian dollar, often driving USD/CAD higher. Now, because of its strong influence on market sentiment, this indicator frequently triggers intraday volatility in USD/CAD currency pair. Now let's take a look at the previous number. Previous number was 6.9%. That was the previous number. Forecast was 7%, and the actual number we got is 6.5%. So this is a good number. And if you take a look at a price chart of US dollar CAD currency pair, we got this bullish trend channel breakdown in market, and price action showed us a nice drop in market on December 5th. So on December 5th, we got this nice big body candlestick over here. Market dropped about 140 pips over here. Then we got this kind of a pullback, and it seems to me price action is trying to drop even further. Canada's labor market has had been showing signs of cooling in the past few months with slower hiring and pressure across several sectors. The previous number we got was 6.9% unemployment rate in Canada. So forex traders were expecting a higher number like 7%, and the actual number came quite less at 6.5%. This is quite a good number, and due to this reason, the Canadian dollar strength we notice on price chart. So recent data showed slowing job creation in some sectors, rising part-time work replacing full-time roles, mild wage growth uneven across industries, and softer consumer demand. Despite these challenges, 6.5%, it's a good number, and actual reading shows the labor market strengthened more than expected. Now, why USD/CAD drop? Well, the USD/CAD price action drop after the release because it was driven by the news, the strong CAD sentiment following the surprise improvement in unemployment rate. The traders unwinding long USD-CAD position reduced expectations for near-term Bank of Canada to cut interest rates, and we also got this bullish trend channel, and price was, staying right over here. Then we got this big washout to the downside. So this created a clear bearish reaction for USD-CAD currency pair. Okay. So the 6.5% number is obviously lower than 7%, and this shows economic resilience in Canada. That's bullish for the CAD, so this means USD CAD moves lower. This is what actually happened on price chart. If we have got a number greater than 7%, then USD CAD might tries to rise back up over here. Okay, so the 6.5% unemployment rate significantly beat expectations and showed resilience in Canada's labor market. Economically, this supports CAD strength, reduces expectations for near-term interest rate cuts, and improves outlook for consumer and business confidence. For Forex traders, the reaction reinforces the importance of monitoring both the headline unemployment subcomponents such as net job creation, full-time versus part-time employment, wage trends, sector-specific performance, and participation rate. These details shape the broader narrative behind the headline number. So the Canada's unemployment rate dropping to 6.5%, well below the 7% forecast, created a strong bullish reaction for Canadian dollar, and as a result USD CAD moved downward, confirming the market's positive interpretation of stronger labor conditions. This release highlight how significant deviations from expectations can create powerful short-term trading opportunities in USD CAD currency pair. Now, let us take a look at previous week global market trends. I'm going to take a look at euro dollar, and then we will also take a look at US dollar versus Swiss franc currency pair. So first one is the euro USD currency pair. Price action is trying to rise up over here, and this is where we got a bullish breakout in euro dollar currency pair, and after that market rallied up over here, took out this high, it even took out this high on a closing basis. So 4 hour time frame is trying to show us some kind of a pullback, I would say, and then market is probably going to resume the uptrend in euro USD currency pair because the trend looks up. It's an uptrend. Uh, we got this breakdown in market, but instead of getting a new low, market is trying to rise back up over here. Next one is the US dollar Swiss franc. This is where we got a bullish breakout. Market tried to rally up over here. Now, if you check out the daily chart, this is where we got the bounce back up. But now market is trying to move in some kind of a trading range over here. This was the breakdown in market, and then we got further weakness in price action. So if I zoom out a little bit, um, this is the high over here. Let me fix the trend line and also change the color to blue. And here's the low. So we got the high and we got the low. Market is trying to move inside a trading range over here, and it's quite possible that the US dollar Swiss franc is probably going to drop. Next, let us take a look at current week macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the unemployment rate in Australia. The second one is the GDP, gross domestic product, month over month related to United Kingdom. Okay, unemployment rate Australia, AUD USD currency pair. So we will get this financial news announcement on December 11th at 12:30 a.m. UTC time. The next one is the GDP, gross domestic product, related to United Kingdom. And the currency pair I'm going to focus is the GBP USD currency pair. This financial news will come out at 7 a.m. UTC time on December 12th. So let's start with the first one. What is the unemployment rate in Australia? The Australian unemployment rate measures the percentage of the labor force that is unemployed and actually seeking work. It is one of the strongest indicators of economic health and provides insight into consumer strength, business confidence, and overall economic momentum. For Forex traders, this release has a significant impact on AUD USD currency pair. Some people also call it Aussie dollar currency pair. A lower than expected reading strengthens the Australian dollar because it reflects stronger employment conditions and reduces expectations for Reserve Bank of Australia's easing. A higher than expected reading signals labor market weakness, often leading to AUD/USD currency pair downward pressure. Because of its tendency to generate short-term volatility, forex traders monitor this release very closely. Now, the previous number we got was 4.3%. That's the unemployment rate number. The forecast is slightly a bit higher, 4.4%. The actual data not yet released. It is going to be released on December 11. Now, Australia's job market has begun to show signs of cooling after a long period of strong employment growth. Rising borrowing costs, reduced business hiring, and softer consumer conditions have contributed to a gradual easing in labor demand. The previous unemployment reading of 4.3% reflected this shift, with the market now expecting an increase to 4.4%. This upcoming release carries added significance for traders anticipating potential changes in Reserve Bank of Australia policy direction. The December 11 release is especially important because labor market conditions have become a central point in the Reserve Bank of Australia's balancing act between controlling inflation and maintaining employment stability. If you take a look at the price chart of AUD USD currency pair, you can see we got this bullish breakout. So technically speaking, I expect more upside in AUD USD currency pair. Now, if you look at the same thing over here in AUD USD daily time frame, it's possible that market is going to continue higher, or we might get a short-term bearish pullback, and after that, market is going to rise up further. Okay, so as far as the technical analysis is concerned, the way I see market is probably going to rise up even further. We might get a short-term pullback, but overall, I think the trend is still up in AUD USD currency pair. The recent Australian employment data highlights slower job creation across service-based industries, and it shows signs of declining full-time positions, increase in part-time employment. Also, wage growth that remains steady but uneven, and businesses are showing cautious hiring sentiment. The forecast for 4.4% unemployment suggests continued cooling, and let's discuss different possible scenarios. The first scenario is the unemployment number comes out at 12:30 a.m. UTC time on December 11, and that number is going to be less than 4.4% number. That would be the bullish for the Australian dollar, and expect further upside in AUD USD currency pair, which is already going up. Another idea is we get a number 4.4% and it matches the forecasted number. So the unemployment rate comes out at 4.4%, and it's quite possible that AUD USD currency pair is probably going to move in a tight trading range, just go sideways. And let's say we get a number which is higher than or greater than 4.4% number. If we get an unemployment number greater than 4.4%, then it indicates weakening employment and increase in unemployment number, which is bad for the uh, Australian economy. Okay, the more higher unemployment number, it's bad for the Australian economy. Okay, so we might get uh, a drop in price action of AUD USD currency pair. So these are the different scenarios. And the unemployment rate is one of the most influential indicators for the Australian dollar, with the job market showing signs of cooling and expectations pointing to a slight increase. This release could generate significant volatility in AUD USD currency pair. Beyond the headline number, forex traders should also watch net employment change, full time versus part time distribution, wage growth shifts, and sector level hiring. These details offer deeper insights into Australia's true labor market health. So I would say expect higher volatility around the 12:30 a.m. UTC release time on December 11, and we might get an initial sharp move to the upside, followed by a clear secondary direction to the downside. So market might try to show you a sideways price action before we get an actual move. The final key takeaway is the Australian unemployment rate is a high impact economic indicator with strong potential to move AUD USD currency pair. With the forecast of getting a 4.4% unemployment number, any surprise, especially a lower reading, may significantly influence short term market sentiment and create stronger trading opportunities. Okay, next one is the gross domestic product related to United Kingdom. The UK gross domestic product, also known as GDP, month over month measures the percentage change in the total value of all goods and services produced across the economy compared to the previous month. It is a critical indicator of economic momentum and a major driver of British pound sentiment. A higher than expected GDP reading shows the economy is expanding more strongly than anticipated, and it often provides a boost to the British pound as it may reduce expectations for Bank of England easing. A weaker than expected GDP reading signals slowing economic activity, softer business output, and lower consumer demand. This typically weighs on the, I would say, typically weight on GBP USD as traders adjust expectations towards a more dovish Bank of England stance, because GDP reflects the overall health of the economy. The release is closely watched and can generate sharp short-term volatility. So on December 12th, 7 a.m. UTC time, the actual GDP number will come out. Let me talk about the previous number. The previous number we got was minus 0.1%. The forecast is 0.1%. The actual data not yet released. The UK economy has shown mixed performance in recent quarters, with signs of stagnation emerging due to elevated borrowing costs, weaker business investment, and cautious consumer spending. The previous GDP reading of minus 0.1% highlighted softening momentum as several sectors struggled with slowing demand and tighter financial conditions. If you take a look at the price chart of GBP/USD currency pair, you see we got this bullish breakout. So it's quite possible that market is trying to retest this trend line and then goes back up further. The December 12th release will offer critical insights into how resilient the economy remains as inflation pressures ease and policymakers assess whether further tightening or potential easing is appropriate. The recent economic trends in the United Kingdom shows weak output in manufacturing and construction. It also shows slower growth in services, particularly hospitality and retail. Uh, different firms reducing hiring due to cost pressures and consumer spending holding steady but still fragile. The forecast of 0.1% growth reflects expectations of a modest recovery after last month's contraction. So I would say if we get a number that is greater than 0.1% number, the GBP/USD is probably going to rise up further because that's bullish for the GBP/USD currency pair. And if we get a number that is less than 0.1%, then GBP/USD currency pair is probably going to show some signs of weakness and we might get a drop in the market. So these are the different possible scenarios. The GDP month-over-month figure is one of the most influential indicators for the British pound, providing a direct measure of economic performance. With the previous negative reading and expectations for a slight recovery, this release could be a significant market mover. Beyond the headline GDP number, traders should also watch for performance of key sectors such as manufacturing sector, services sector, and construction sector in the United Kingdom. Any upward or downward revisions to previous data would provide us, volatility in the market. So I would say expect increased volatility around 7 a.m. UTC time. Initial market reaction may be sharp, followed by a more stable direction as forex traders digest sector data. A strong deviation from the forecast can produce extended intraday momentum in GBP/USD currency pair. So I would prefer to monitor liquidity, market spreads, and broader US dollar sentiment for confirmation signals. The United Kingdom GDP month-over-month release is a high-impact event with strong potential to influence GBP/USD currency pair. With forex market expecting a modest rebound to 0.1% number, any unexpected weakness or strength may significantly shift market sentiment and create valuable trading opportunities. Next, let us take a look at current week global market trends, and I am going to discuss the euro dollar and AUD/USD currency pair first. So regarding the euro USD currency pair, we got this breakdown in market, but it seems to me market wants to go a bit sideways. So in daily time frame of euro dollar currency pair, we got a bullish breakout, and I would say a good idea is to look for a bearish pullback and then look for potential buy trade setup in AUD USD in a euro USD currency pair. Same goes with the AUD USD. Here's a bullish breakout inside Australian dollar versus United States dollar currency pair. So price action is it is showing some signs of strength over here. And we also got the same bullish breakout in AUD USD currency pair daily chart. So even if we do get a pullback in AUD USD currency pair, the chances are high that market is going to rise up even further. So a good idea is to look for potential buy trade setup with a pullback. Next, let us take a look at US dollar versus Canadian dollar currency pair. USD-CAD currency pair, this is where we got a break of this bullish trend channel and market dropped quite significantly over here. So the way I see price action is just simply taking some rest over here and expect further weakness in price action of US dollar versus Canadian dollar currency pair. So a good idea is to look for potential sell trade setups in USD-CAD currency pair. Wait for a pullback and then look for a sell trade. Next one is the spot gold. Spot gold trend is up over here, and I expect more upside in XAUUSD pair. The daily time frame shows some signs of weakness, but market is just going, sideways over here. So the way I see, I expect further upside in spot gold. Here's a nice bullish trend line over here, which is currently supporting the price action in XAUUSD pair. So these are the trader insights, and if you have any questions or comments, feel free to type inside the chat box and I will be happy to answer your questions. So what we have learned today, well, we discussed about unemployment rate in Australia, and we also talked about gross domestic product for the United Kingdom. Uh, A good idea is to check out the EURUSD, AUDUSD, USDCAD, and spot gold pairs. These are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, December 16th, 2025 at 12 p.m. UTC time. So that's pretty much it for the time being from my side. Have a nice day and bye bye.